of PharmEasy. Boy, did it make waves when it bought Thyrocare for more than 4,500 crore rupees. So how is business getting along, especially when the COVID factor is no longer at play? Remember, this is also a company that has large ambitions when it comes to an IPO. The big news, of course, being that for now, PharmEasy going back on its IPO, withdrawing the Draft Red Herring Prospectus for which it had applied to the market regulator. We've got the co-founder in our studios. Yes, he's come to our studio. Siddharth, thank you so much. Welcome to our studios. It's the first time you've come to our office. We really appreciate it.
First time ever. Thank you so much.
We did show him how television works. We took him to the production control room. And now he's sitting here for the interview. Why have you decided to not go ahead with the IPO?
Look, I think there are a couple of factors. First and foremost, I think the company is on a very different and rapidly evolving trajectory. While our companies had tremendous amount of growth for these last few years, and we've grown more than 50% consistently, we believe that going ahead, the focus of the company must be on growth as well as profitability. And we believe that within the next 12 months, as the company nears an EBITDA break-even, might be a much better time for us to tap the capital markets. Because
so you're listening to the markets.
We are absolutely listening to the markets.
You've learned from others' examples, right?
We have learned
from Paytm to Zomato to Policy Bazaar. You've seen it all and said this is not correct.
We are learning from the markets. We are listening to them, and I think most importantly, we're proud of the fact that we have Mr. Aditya Puri as our chairman. I think he has one of the keenest ears and the keenest understandings of how things are and where things should be. So our focus is on growth as well as profitability. And we are fairly confident that within the next 12 to 15 months, the company will get to EBITDA break-even, at which point of time we can come to the markets with the proposition of a company that is not really just growing phenomenally in the sector, but also one that is EBITDA break-even very soon. Number two, we already have the requisite capital required at this point of time for us to take us to that point of time, right? So the IPO was solving also for our capital needs, which is already taken care of on account of the capital buffer that we have in the company.
Is that the loan that was reportedly taken by the company, around $300 million from Goldman Sachs?
So there is a clarification. Yes, $300 million did come from Goldman Sachs, but it is a combination of $200 million of a straight debt and $100 million of preference convertible equity or a preference loan as we would call that, right? So yes, we have already received a cash infusion within the company, and with the proposed rights issue that the company is going to undertake, we will have enough and more capital buffer to ensure that we are well set on our path, and this trajectory of growth with profitability will definitely be seen in our performance very soon.
So you, just to be clear, you are withdrawing the DRHP because you think it's better to tap the capital markets when you are truly profitable. It has nothing to do with the volatility, the market conditions. The question I'm trying to ask is, let's say in a couple of months, markets improve, but you're not profitable yet, you'll hold off on the IPO.
We would ideally like to come to the market where we are either already profitable or we can show profitability in the near term, which is let's say 3-6 months, right? So we want
you want to debut saying this is my timeline.
We want
first listing and then saying this is my timeline.
Absolutely, right? So rather than coming to the market and saying, look, believe me that I'll do this, I want to come where I've already shown proof of what we have done, which is grown and with profitability, right? So we'd much rather have the market trust us on our performance rather than just on our promise.
The other thing I want to ask is that the COVID tailwind, it's no longer there, right? Like if you had COVID, it wasn't just the RT-PCR test. There were so many other tests which would have to be done, D-dimer, CRP, all of that. That's out of the window. How is business? Because, a lot of diagnostics stocks have also been suffering because the COVID tailwind is gone.
So look, I think it's very important to understand that as a group, as API Holdings, our business involves multiple things. Predominantly, a large part of our revenue comes from the sale of products, which is either medicines or OTC products or devices. A fair part of our revenue also comes from services, which includes diagnostics, consultations, and so on and so forth. Now, as part of the overall revenue mix, if you look at the business as a whole, FY22 vis-a-vis FY21, we've grown our net revenue. And what I mean by net revenue is this is revenue recognized on the books of the company, net of taxes, GMV,
discount. Old style dhanda,
old style dhanda net revenue has grown more than 48%.
Since?
FY22 versus FY21. And FY21 itself had grown more than 50% over FY20. The point I'm trying to make is that our business is very resilient. There are certain pockets which will grow. For example, like you said, at the time of COVID, your COVID testing will grow up. But at that time, the consumption of, let's say, acute medicines comes down. In normal times, let's say the consumption of acute medicine goes up, your regular wellness test goes up, and COVID testing comes down. So our business is fairly resilient and has a wide portfolio of revenue, which ensures on the whole, on aggregate, the business continues to grow, right? So koi segment upar jayega, koi niche aayega, but net the business is growing exceptionally well for us.
For you, because can you back it up? Because when you look at the results or what the other players have been saying, from a Dr. Lal to SRL, all of them, it's down.
Because again, we are trying to compare the revenue of a segment of what we do as API.
Oh, you mean because we have to see the online,
the overall
pharmacy.
the pharmacy piece and overall, right? Because as API Holdings, we are a company that is involved predominantly across sale of medicines and provision of services, right? So I think it would be unfair to pick a part of our business and compare it to somebody else's business, versus the right way to visualize a business is a combination of sale of medicines and services. And on the whole, as a whole, we are growing more north of 50% year on year. And the benefit of that is, like I said, I mean, otherwise, to take your
the
point,
cross-selling that you're
cross-selling, otherwise what should have happened is, in the year of COVID, we should have grown to 200%, and the next year maybe grown 30%, and the next year 20%, because inherently the business has several modes and several advantages, and in a lot of ways several hedges also, that some part will grow faster, some part will grow slower, but on an aggregate basis we are still growing at an extremely rapid pace, right? So I think the right proxy is to look at how is outpatient healthcare growing, and outpatient healthcare has been growing 12 to 15% every year, versus our growth for the past 3 years consistently has been 50%.
But that's a base effect at play, right? Pre-Thyrocare.
Not just base effect, right? I mean, the revenue that we recognized last year, again, the dhanda revenue, as we put it, right? The dhanda revenue, like you put it, is north of 6,400 crores. I don't think that we can anymore afford to call ourselves a small company. It's a substantial number, and dare I say, one of the largest revenues.
You acquired Thyrocare. You're Mr. Aditya Puri on your board. You're not small. We're aware of that.
So I would say that the base effect is pretty large, and it's 6,400 crores of net revenue, substantial revenue as part of the outpatient sector. So while we are still small in the larger sector, but we have a substantial role to play now. And on this base also, the company believes that it can continue to compound its growth north of 25 to 30% for the next 5-6 years at the very least.
Just repeat it, because I'm baffled by the numbers.
We still believe that
this is part of your investment deck and all. Are you going for fundraising or what?
So I'm not at liberty to speak on any numbers, but I can speak of my strong conviction in the business, and our strong conviction in the business, and with the detailed inputs of our board, like I said, led by Mr. Puri, and the plans that we put in place, we are fairly confident that the company will continue to compound its revenues north of 25 to 30% for at least the next 5 or 6 years. And like I said, within the next 12 to 15 months, you will see a business that is EBITDA break even, right? So we will achieve both exceptional growth with profitability.
And there is no problem with the existing investors who may have wanted an out because of the IPO being delayed?
Not at all. In fact, if you, as you would have seen in our DRHP, the entire DRHP was 100% primary issuance, right? Which means all the investors believed in the long-term prospects of the company. And even till today, all of these investors continue to believe in a phenomenal long-term prospects of our company.
Okay. Now, the other thing I want to ask you, competition is rising. The COVID tailwind may not be there, which you're saying you're not worried about, but competition is rising. You've got Tata 1mg. I think all of us have seen those ads for 100 rupee tests, right? We're talking about disruption, price wars, and so on. Flipkart has grand plans. We know Reliance has done what it has done via acquisition, NetMeds. Amazon wants to be in the place. We don't know, the Adani Group wants to enter, it has said it wants to be in healthcare. The fact is, you will be the least capitalized out of all the names that are thrown at you. How are you going to manage the competition?
Look, I think our inherent focus is our consumers. Inherent focus is our business, and what we can do to serve these consumers extremely profitably, and how we can continue to grow in our market, right? I think the beauty of it is the entire healthcare market is an exceptionally large market. We are still a very small part. We are a significant part, but still an extremely small part.
Winner take all market?
There are multiple players which can come, and I always look at the advice of Mr. Puri, where he says that there is room not just for HDFC Bank, but then there is the ICICI Bank, and then there is Kotak Bank, and there is Bajaj Finance, and there is SBI, and there are so many more, right? at last count, there are 100 plus large companies which have a balance sheet north of $1 billion, if I'm not wrong, in their financial services space. So there is room for so many and more, right? I don't think we are living in a world where there's going to be one player who's going to take everything. I think our strategy remains our consumers, our retailers, our partners, our doctors, and how we can provide the best of outpatient healthcare to them in a single platform, right? And I think there's room for enough and more people to continue to come and not just survive but thrive in this market.
So this cross-selling was Mr. Aditya Puri's idea for PharmEasy and API?
Absolutely right. I mean, it's his mantra, right?
He did at HDFC.
People know it at HDFC
Yeah.
Bank, right? He's known to provide everything that they need to the consumers at one place, and he keeps on re-emphasizing that the focus of our platform is to provide everything in outpatient healthcare, holistic healthcare, and not just more importantly in urban areas, but in semi-urban and rural India also, right? I'm very proud to say that through our network of ThyroCare, we have a presence in 280 districts of India. So 70% of a country's population can get access to a diagnostic test, request it, get their sample drawn, get the sample flown into the laboratory, have it processed and get a result in under 24 hours. Or that our platform can now deliver medicines in every single habitable zip code of India. Right? So we are not just building a business that's focused around
a health
the
tech
urban.
platform.
It's a platform which is very wide
With network effect.
and focused on semi-urban and rural India also.
Yeah. So you've thrown out these numbers, how you are in all of these pin codes. What is your market share?
Look, I think it's almost like beauty is in the eyes of the beholder. Somebody can look at the market share as part of the digital ecosystem. Somebody can look at it as part of just the pharmacy ecosystem. We would prefer to look at our market share as a part of the overall outpatient healthcare ecosystem, right? Because we straddle across outpatient healthcare in information, consultation, diagnostics, and treatment. Today, fair to suffice that let's say this year we should hopefully get to north of $1 billion in terms of dhandawala net revenue, right? And the outpatient healthcare market is at least $60 billion plus, right? So we are still a small, insignificant, less than 2% of the overall market, right? And there is so much of headroom for us to continue to grow now.
So are you, where are you in the pecking order of all of the big names that we talk about when it comes to outpatient care from the organized space?
So again, I think there are, like I said, very different ways to evaluate, right? Because in terms of diagnostics, obviously we have Dr. Lal's in Metropolis who are significantly large in terms of market cap and their revenues. We are significantly larger in terms of the samples that we do and the number of processes that we do. I think there are other companies which are doing very good job in terms of retail pharmacies, right? Which we don't have. There are some companies who are very good in distribution, right? So I don't think it's fair to do a apples to apples comparison, because what we are doing is a significantly, I would say, integrated horizontal outpatient healthcare platform which is giving holistic care. And a lot of these platforms are doing a great job in their respective verticals, right? So unfair to compare us with them. I think they're also doing a great job and so are we. And there's a lot of room, I think, for all of us to continue to
Correct.
grow.
But then tell me something. You're saying it's not apples, it's apples and oranges. Does that mean you're not going to enter the price war that has started, these 100 rupee tests or not?
Look, I think ThyroCare has always championed the cause of being one of the most affordable diagnostic B2B labs in India, right? So I think the prices at which ThyroCare does its test and the prices that it offers to its partners and through them to the consumers are already very, very competitive, right? So I think that the way we are going,
Just around 100 rupees?
it's yes, it's in that zip code. It's doing very well, and at that price, all I can say is that the numbers of ThyroCare are there for everybody to say. It's already very profitable, right? So we believe that at an affordable price, at large volumes like the way our backend does, we're able to create a platform that's extremely robust and profitable and growing extremely well.
So you're not going to give any numbers and whether you're entering a price war or not?
Not this time.
No? Since you mentioned Metropolis, you have Mr. Aditya Puri's advice all the time with you. Did you consider more acquisitions? At one time you were on a serious shopping spree. And now you want to sit and increase the cash runway.
I think there is a time to acquire. I think there is a time to consolidate. All of our acquisitions were done with an intent of building our platform's core capabilities, right? And we said that even when we were chatting last year, diagnostics was one of the missing pieces of our core capability, right? Which we would have taken a very long period of time to build out, which we did, right? But I think we're now extremely well set, and like I said, everything in outpatient healthcare, information, consultation, diagnostics and treatment, We now have a very robust, very large platform across the board, and we hope that now our job much more is on integrating this even more and more closer and giving that as a single offering to the consumer versus now figuring out about a new offering at this point of time.
Yeah, because at the end of the day, a patient would have uploaded the entire prescription,
Right.
and whatever the doctor's instructions were on the app. So you already have that, and that's the cross-selling that you're trying to.
Exactly, right. So we want there to be a single place where you can come and say, okay, I want a consultation with a doctor. I want my medical records to be stored. I can get a diagnostic test. I can get an OTC product. I can get my medicines. I can get my refills. I get my reminders. All of it on one single platform, right? And that is the focus and genesis of it, right? It's almost like in HDFC Bank, you have one relationship manager who will take care of everything for you, right? We want to be that partner for holistic healthcare for you.
That's a good line.
Yeah.
So as you withdraw the DRHP until we see you profitable, what can we expect? Have you started reducing your cash burn?
That has already happened.
Are those IPL ads over? Are they going to?
No, I still think we have a pretty healthy growth and marketing budget. But I think the company's focus always, I mean, even when we had filed the DRHP, if you look at our DRHP, we had said that we are contribution margin positive.
Yeah.
Which means on every order or at an operational level, we were making money.
Yeah.
The focus was how fast can we scale those orders so that the profit we make from those orders is enough to take care of our cost. We've reprioritized the business to focus on orders that are more and more profitable, or services that are more and more profitable, or activities that are more and more profitable. And therefore, we believe that going down the same path that we had laid down at the time of IPO, we're just accelerating that, and therefore we'll get to break even within 12 months. So I think what you can expect from us over the next 12 months is the company that continues to have a significant focus on growth. We are not shutting down. We are not going to reduce our growth budgets.
So you've heard the same rumors I've heard.
You've heard the same rumors. Exactly, right? I think I've heard everything from the fact that, founders are running away, or founders are selling shares, or founders are going away.
I heard you're selling Thyrocare also.
Yeah, so none of that is true. None of the founders have sold one single share from the time we filed the DRHP, and we don't intend to sell any shares. As a matter of fact, we are considering putting some of our own money.
Didn't you do it? Didn't some of you put own capital? Yeah.
Already. So there's another rumor. In fact, certain publications printed that the founders removed close to $48 million, or the senior management got $48 million from the company as a bonus. I just want to clarify that the founders and senior management got that bonus linked to performance initiatives that were agreed years in advance, number one. Number two, but all the money that the founders and senior management got, every single rupee was reinvested back into the company. So it wasn't like we got $50 million and took home $50 million. We got $50 million, reinvested the whole $50 million. In fact, while we were doing this, some of our team members said even we want to invest. So our other team members invested another $10 million. Oh. So on a net basis, the senior management got $48 million and invested $60 million back into the company. Point number one. Point number two, we are considering infusing some of our own money even today, even right now, as a part of our rights issue, because we are extremely confident about what we are doing. And so, like,
is that also because there's a winter season and you don't want to go for external capital?
Look, I think the global macroeconomic is not lost on anybody, right? I think all of us are completely
you figure this is better than
receptive.
maybe taking expensive debt or diluting?
Absolutely. I think today the shareholders of the company truly believe in our vision. Like I said, we've already halved our EBITDA losses from March, right? And we believe that we will get to EBITDA break-even within 12 months. The shareholders of the company believe that this is a very good company, which, like I said, has dhande wala revenue, has.
I think I've given you a line.
You give me a very good line, a lot, and that's your trademark line. And we'll see a company that is going to get to EBITDA break-even very soon, and a company that's going to grow. So not only us, but the other shareholders also feel that they would like to participate. And like I said, with the cash buffer that we already have, this is enough for us to continue to, like I said, not just survive but thrive. Point number A. And point number B, as I repeat, we are not selling a single share of the company. The founders have not sold. In fact, founders and senior management have put more money than the bonuses that they got. They will continue to put money because we truly believe, and neither are we selling Thyrocare, and we are all here. Thank you very much.
The boys of Ghatkopar, as you often call, will continue to build.
The boys of Ghatkopar will continue to build and continue to do so in a good way.
So So we wish you all the very best and look forward to more interviews.
Thank you so much. Thank you so much. It's a pleasure.